he's not here to rescue any of your stock losses over the last couple of weeks, okay? We are basically going to a very bad time. Stocks like Tesla and Space will see the year lows in January. 2022 will stay very turbulent. Guys, before this video starts, I want to shout out somebody that is absolutely crazy right now on Twitter. And this is Alpha Wifey. Follow this account. It's a quant-based research and hedge fund manager, and it's absolutely incredible. I have seen great traders out there, but this is basically mind-blowing, okay? Make yourself a follower. Make sure to understand what the tweets are about, learn and make your own research. And then I think that something like this could be very, very helpful to you as well. And you know, just following on this, Twitter account is absolutely exploding. From December to now, this account, Wi-Fi Alpha, gained about 22,000 followers. This is, just a proof of concept. So let's dive into the video. Okay, just a couple of hours ago, the Fed came out. Everybody looked at the Fed and Jerome Powell, what he says next. And he disappointed a lot of you guys, doesn't he? Well, there is a lot to talk about. But first, let me give you the straight summary of what's happening, okay? He's not here to rescue any of your stock losses over the last couple of weeks, okay? 2022 will stay very turbulent. And I will tell you something, that he put something into the market which the market doesn't like. Okay, he brought a lot of uncertainty. There's one thing that the market doesn't like, it's uncertainty. He didn't really say if there is, a straight line of rate hikes. Do we see a 0.5 or a 0.25 rate increase, right? What happened with the quantitative easing and so on and so forth. So he left a lot of question marks, but here is one of the points from the speech, from the Q&A, that is for me one of the most important parts, where he is asked about the financial stability of the system, and then he says something about the asset prices.
As the Fed shifts towards an accelerated taper, I wonder what your read is on financial stability risks right now. I mean, these periods can be, it seems like the taper process has gone fairly smooth so far, but what do you see in terms of stability risks? Are there any parts of the financial sector that concern you right now? And are there any significant systemic issues that are on your radar, maybe from the cryptocurrency sector or something like that?
We have had now for a decade and more a four-part financial stability framework that we use, so we can hold ourselves to the same kind of framework and not just treat each event individually. And there are four key areas: asset valuations, debt owed by households and businesses, funding risk, and leverage among financial institutions. So I would say asset valuations, I'm going to go really superficially here, but asset valuations are somewhat elevated, I would say. Debt owed by businesses, and households. Households are in very strong financial shape. Businesses actually have a lot of debt, but their default rates are very, very low. But nonetheless, it's something we're watching. Funding risk is by and large low among financial institutions, but we do see money market funds as a vulnerability, and would applaud the SEC's action this week. Leverage among financial institutions is low in the sense that capital is high. So overall, financial stability. That's how I would make an overall characteristic, but we break it down into those pieces. In terms of the things that we're looking at, it's the things we've already talked about to some extent. It's the emergence of a new variant that could lead to significant economic. If there were to be a variant, for example, that were quite resistant to vaccines, it could have another significant effect on the economy. We don't see that. We don't have any basis for thinking that the new variant that we have is that one, but it's certainly one we're looking at. I would say, cyber risk, the risk of a successful cyber attack is, for me, always the most, one that we we would be very difficult to deal with. I think we know how to deal with bad loans and things like that. I think more a cyber attack that were to take down a major financial institution or financial market utility would be a really significant financial stability risk that we haven't actually faced yet. So I could go on with a list of horribles, but I think that's a decent picture of where I would start.
If you know a little bit about economics, then you will know what I'm talking about. What if you don't know anything about it and the Fed thing sounded like Chinese to you? Well, don't worry, I'm here with you, I've been there, so I will help you out. So first of all, he says that asset prices are inflated, okay? So this means that he thinks that the stock prices are high, so therefore he doesn't care that they go down. So what he rather cares is that the long-term bonds, the 10-year bonds, are going a little bit higher, because the problem is once the yield curve invert, okay, like the long bond yields are going down and the short term are going up, you have like a curve yield. I will put a picture here, okay? It doesn't justify with my hand signing here. So, you know, if this happens, we are basically going to very bad time, okay? And Fed don't want to do this. So he's more interested into raising the, with his statements and his actions, the long-term bonds. And he did it, like the long-term bonds skyrocketed yesterday. And this was also the reason why the stocks are sold off a little bit to the highest point was like 3% almost intraday, right? From the S&P almost +2 to a -1 at some point. So it's not that easy to navigate for Jerome Powell, and I get it, but you know, this is what's happening, and this is why stocks like Tesla and space will see the year lows in January. This is what I'm thinking, okay? So are we over the cliff? Not yet. Will there be usually, you know, some spikes up? Absolutely. Okay. Same like in the bull market, we have some spikes down. We are having in the bear market spikes up. Okay. This will be the case. All right. So with that said, let's dive further in. Okay. As you can see, as of this early morning futures that we can look in here, the future started quite red, okay? So the market didn't like the overall appearance of the last evening's Fed, and then we kind of recovered a little bit, went a little bit down, then back up. So it seems like the market is still very undecisive, okay? But there is something else that I wanted to show you. Yesterday we had this 10-year bond yield increase, okay? Since a couple of days it started to go up, but then yesterday with the Fed it went up quite dramatically, right? In just a short time, like 3%. And this, you know, resulted in the sell-off, let us see, in the sell-off of the S&P 500. We were plus 1.7 and then we went down you know, almost 3% intraday, which was great for those people who knew that, you know, what is the effect on the market. However, now let's have a look what the next days could bring us. I think, like, you know, we are in a very uncertain spot here, because if we are looking into the 3-month chart of the S&P 500, we are below all the moving average, 50 moving average, 100 moving average, 200 moving average, which is usually a downtrend. So the possibility of more lows than highs is here, okay? Believe me or not, you will go back to this video and say, he was right. And I was right, baby boy, okay? So as you can see here, it's really, really interesting that all of the signs shows us the market will go more down, and this is how you can prepare, okay? If you want to buy the dip, wait a little bit. If you are a day trader, short the market or wait a little bit for a better entry point. However, there will be better days, that's for sure. Interest rate, you know, hikes are part of the circle of economics that need to happen. Otherwise, we go into super bubbles and then they burst, and then, you know, you have a margin call like that. Now, before ending this video, I would like to show you what Tesla and space specifically as stocks are currently having for an out view, okay? Let's start with Tesla. Tesla yesterday announced the earnings and they were good. They were by no means bad or anything. However, the whisper numbers were actually a little bit higher than expected, okay? And therefore, Tesla earnings came out a little bit less than the whisper numbers, which are the unofficial expectations. But, you know, usually when the stock beats even those, then it's great, okay? However, Tesla couldn't do that. There was some nice bits and pieces and mind-blowing things in the earnings call. Definitely you can go out on YouTube and see everything, but you can see even Tesla cannot break through the macros today, okay? You see that it's down pre-market 1%, and if you're looking into the following, there is something happening with Tesla, which is, let's go into the 3 months chart to see, we are currently fighting with the 100 moving average. So it's not that bad for Tesla. We still can, you know, turn into a better place. And guys, remember, just on Monday, we reached 850. So not far ago, then we're going into a very deep place, which then means that we could go even to 600 Tesla, okay? Everything is possible into the market. Don't exclude anything, okay? Don't be so arrogant. I'm now reading a very nice book called Disciplined Trader. This is this book cover here if you want to, you know, buy it. And it's about the beliefs of a trader, and everybody is just acting on their own beliefs and experience. So if you believe that something like this will happen, you will act in this way. So the market has a lot to do with psychology as well. But however, let's dive into the most speculative stock that I own. And you know, here you see pre-market Space is a little bit up. I feel like Space is now fighting those levels here at $7-8 and want to see where it's going. Technical wise, we are so bad, like no other stock on the market. We are on the downtrend, way down. But guys, remember at $6, okay, and we are not far away, the company assets or the cash inside the company is exactly the amount that the stock is worth on the stock market. In the 80s, there were a lot of traders and corporate raiders that made a lot of money. They choose companies that were on the balance sheet more worth than on the stock market, and then the stock turned and in some bull markets, and this is how they make a huge amount of money. So don't forget, guys, bear markets makes generational wealth, and then you just put it long term, okay? And then you keep it for 20 years or 10 or 15 or 12, whatever.